what a difference 2 weeks makes. You see this massive sea change in sentiment. And of course, sometimes you're going to have a few bumps along the way, as we're seeing today, but there's some of that froth being taken off. But, you know, what are they looking at in particular here? Is it broad-based or is it more narrow?
It's very broad-based, and you see that because what's led the rally has been tech, you know, even property developers. It's been the beaten-down sectors. It really is a sea change in terms of sentiment. Also, a lot of people chasing that rally. You know, I think it's really interesting that we were here exactly this time last year when all of Wall Street was calling for a rally this year. That didn't pan out. And what's different this time round is that when you read all the research reports saying, yes, Chinese stocks are going to outperform next year, even Morgan Stanley, who's been really bearish, upgrading...
They called it uninvestable, didn't they, just a few weeks ago?
Yeah,
the
tech analyst did.
Yeah.
You know, all of that is coming with a very, very strong note of caution. I think that's the most interesting thing here. You mentioned bumpy. That's exactly what we're seeing now. The reopening story, you know, we get these days where the markets rally significantly because everyone's chasing this reopening story. It's the kind of stimulus that everyone's been waiting for. It's the pivot that's really going to change macro next year. And then you see days like today when actually, you know, let's take some profit off the table. There's been a very violent move higher. And the reopening story is going to be difficult. I mean, a lot of people are surprised at how quickly China has changed the COVID-0 policy.
Sofia, what's standing out right now is the volatility in the Chinese market, and that is set to continue, no?
If you look at positioning has, it's all about volatility. I was digging deep into the terminal last week, looking at what people are really paying up for, and it's all about hedging, downside protection. What's interesting is that in the derivatives market, at least, the price of bearish contracts is really high. This is what protects you if the markets do tank. But also the price of bullish contracts is high. So what that shows you is that people are really, really hedging for violent swings in either direction. They want to make sure they can capture the upside in the market, but they also want to make sure that they're protected on the down. And that's really lessons from the past 2 years has been, you know, volatility will pick up, not just in stocks, but also in the yuan. I mean, offshore yuan volatility reached a record this quarter, and the bond market, the government bond market was so volatile that regulators had to step in to really ensure that liquidity was okay. So it's all about preparing for that volatility, but making sure that if the market does rally, it will rally hard and that you're exposed to that as well.